Hello, everybody. So, what a stressful day in the market we've had, and it got worse in after hours. It got worse. So, the title of this video is No Tariffs on Bitcoin, No Tariffs on Teslas, No Tariffs on HIMS. Yet these stocks dump because we live in a messed up market where it's baskets of stocks who are traded and were sold indiscriminately based on TradFi's impression of what is right, what is wrong, what is certain, what is uncertain. So let's acknowledge this nonsense. Bitcoin dropped to 104,000-ish, just below 104,000. And it's right back at 112 right now. So if you look at since the beginning of the day, I mean we've lost a whopping $16,000-$17,000 in a single day. If you go far back out, more than $20,000 is the difference between the high and the low in a single day. This asset remains extremely volatile and, of course, in my view, extremely undervalued, extremely manipulated. It makes very little sense that an asset would just be up or down 50% based on unrelated news. I cannot emphasize that enough. This is unrelated news. They just sell Bitcoin because it was looking for a reason to dump, to liquidate the longs, to liquidate the leveraged players. And it's not linked to tariffs. There's no tariffs on Bitcoin. Bitcoin is going to be in the cloud. Now, let's make sense of this. Let's try to make sense of this. So the news after hours is, of course, 100% additional tariff on November 1. And because of that, the mega caps lost the steepest drop since April. So 770 billion. Now, it's a big deal to say since April because you may remember in April, we broke records of drops from the 80s. We beat records from the 80s as far as like daily drops in April. You remember that, right? So the 2020s remain an awful season for stocks. It's not a good decade for stocks. And this madness continues. And, I just want to show you kind of a madness. So let's take a random stock today, Walmart. Walmart, of course, sells a tremendous amount of goods from China. Walmart pioneered the import of Chinese goods in the 90s. Walmart is all about made in China. It pioneered the sector in the 90s, actually. Like I said, Walmart is up on the day. Walmart is up on the day. Let's take a stock which pounds the table on not having anything to do with China, who keeps saying China is not in our guidance, who does everything to not deal with China, to comply with the regulation. China is not in our guidance, who only ships the older version to China, NVIDIA. NVIDIA is down, 7-8%? Well, not quite, 7%, 6%. It's down a lot. Which why is NVIDIA down so much? Because NVIDIA is the largest company. It's the largest company in the S&P. It's the largest company in the NASDAQ, and so it was sold off because the market sold off. And of course, Walmart is a much smaller company, and so it can trade based, I guess, on fundamentals or whatever. I mean, over the short term, trying to make sense of these movements is entirely nonsense. Like, we know the guidance at NVIDIA includes no China. NVIDIA manufactures products in Taiwan. They don't manufacture products in China. This makes so little sense to me. Anyways, moving on, just for fun to, you want to have fun, look at this, right? Let's look at what asset was up today. Gold was up today. So pretty crazy to see, right? Gold, this historic asset was up today, continuing the rally. And of course, maybe gold people rejoice today, but of course, the assets since 2004 only returned 10%. Only returned 10% since 2004. We're less than the S&P 500. And money was up today. Bonds, right, which I take as a proxy for money. Money was up today at 1.6%. So we bought bonds. And may I remind you, like TLT, so as a bond ETF, 3.7% average annual return since 2002. So for 23 years, you are guaranteed to be debased 12% more than the actual debasement, which I consider to be 15%. So the money-losing assets over the long run are running. And the best performing asset over the long run, which is Bitcoin. Again, putting this chart here, 2015 to 2025, 65% average annual return in the past 10 years. Bitcoin was down, 7-8%. But if you look at intraday today and what happened in after market, we were down to 104, which is so absolutely insane. So the high performing asset is being sold off, and the other assets are being bid up. And none of these assets have anything to do with tariffs. None of them. And it's a far-fetched argument to say that if this happens, then that happens, and then that will happen. And as a result of that, we sell off because we have a chain of events that we expect to happen a certain way. So anyways, and Walmart's up on the day. Anyways, okay. Let's go. Let's talk about strategy. Of course, most requested stock. Strategy traded down to 290 in after hours, of course. And now it's slightly back up. But let's start with Bitcoin. Of course, there's no tariffs on Bitcoin. Bitcoin is money stored as speech in your head that lives in a blockchain in the cloud. It's non-tangible. There's no tariff on Bitcoin, as Saylor reminded. Didn't change the fact that Bitcoin dumped, even though it's definitely not tariffed, right? Gold, by the way, I mean, gold could have been dumped based on tariff. Remember a few months back, there was a conversation of putting tariffs on gold bars, and that kind of spooked the market. You can put tariffs on gold. You can't put tariffs on Bitcoin. So anyways, it's at the lowest level in a very long while now. And of course, the tragedy of this, but I am not surprised, is that the biggest dip happens outside market hours, which means that, well, many people who watch the channel like to play derivatives like options. Well, guess what? The options market's closed. And of course, many platforms don't allow you to buy on a Friday afternoon after a market hour is closed. After a market's closed, most platforms don't allow you to buy. That's when strategy dumps. This is not the first time. In fact, the cheapest shares I ever got of strategy, and I buy them regularly, they are often in after market hours. That's when these things dump, when the markets are closed. And that's why in my view, we need to move to a Web 3.0 world where everything is traded 24/7. That way it's fair, and that way everything is fair and open, and everybody has equal access. Unfortunately, we live in that transitionary world right now, and it's not like that. Let's talk about another stock, which, in my view, again, has nothing to do with tariffs. Chinese cars, Chinese Teslas, Chinese-made Teslas, Giga Shanghai-made Teslas are not shipped and sold in the United States. They're not for the USA market. Yet Tesla is dropping so much today. Right, almost 8%. Why is Tesla down almost 8% today? Because again, it's the index that are selling off. As far as I'm concerned, Tesla is not importing cars to the USA from Shanghai anytime soon. Most of the Shanghai cars are sold in China. Some of them go to Australia. Fewer and fewer go to Europe. In Europe now it's mostly Giga Berlin. So to me, Tesla is very much insulated from tariffs. Very, very much so. Especially when you compare it to the competition who imports a lot of parts from China. And also, the valuation of Tesla, in my view, has very little to do with cars. Most of the valuation of Tesla has to do with FSD. This is FSD 14 being released. And of course, the bots, which are becoming more and more impressive. But the market values Tesla on autos and the autos that they sell, which the market should be so excited right now because they're launching a new cheap Model Y in Europe for 37,000 euros. This is going to be a killer. The marketplace is going to explode. This is very, very cheap for a vehicle like this over there. It's also cheap in the US at $39,000. The market thinks Tesla is a car company. They should be very happy about that. But of course, the market looks nowhere beyond that. It's all about the tariff tantrums. Sell stocks, sell risks. Let's buy bonds. Bonds are safe. There is no issue for the US government to pay the bonds because they can just print the money. Anyways, it just makes very little sense, and no tariffs on stock, and the less tariffs you have, and the less threatened by tariffs you were today, the more likely you were to dump. Let's conclude with a final company. HIMS, of course, I'm talking about the top 3 stocks of the channel, HIMS, Tesla, and Strategy. Well, let's talk about HIMS. HIMS down nearly 10% today. Not quite, but almost 10%. Why is HIMS down? What's the relationship between HIMS and China? I have no idea. They're compounded in the USA with a lot of USA ingredients. I suppose some ingredients are from India, but even if some ingredients were for China, they have 80% gross margin. So if you have 80% gross margin, your cost of raw materials is next to nothing. You double it, you triple it, you quintuple it. It barely touches your margin. This is a high margin business. So and healthcare is defensive. It's subscription. People are less likely to cancel the stuff because they need this for their health. But go figure, the market dumps it. Why does it dump it? Because it's part of an index, because it's a small cap. So boom, we're going to dump it. And what do they bid on today? They bid on the bonds, because the bonds are safe, right? I mean, the bonds are just fine. So anyways, the short-term horizon shortens, as we say. It's just very short, like the market, when the market is scared, they just look at super short term, and they keep being stuck in the fiat paradigm and judging stocks based on fiat. We should really judge stocks based on their own merits. Today was a buying opportunity. I bought a few stocks today that I shared on Patreon. Was a buying opportunity, but wow, how maddening was this day? Worst day since April. This was no good. Let's hope for a Monday being back, which in my view is likely. But anyways, this was not investment advice, not financial advice. This is only entertainment. I'm hoping you're entertained. Please please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.